All right, I'm mad. Why am I mad? Because I just recorded a 26-minute video and my mic was not on. Yeah. RIP in the chat. Anyways, what's up, y'all? I might start calling y'all lab rats because y'all are in my Uncle Phil's trading lab. Anyways, if you aren't in this, go ahead and get in it. I don't know what you're doing, bro. If you have friends that are interested in trading, send them the invite link to this channel. You can find it right here, Uncle Phil's lab. Literally, I just send out my trades, how I take them, how I manage them, etc., etc. I don't always go too in depth because that will just be so much typing. But I'm just gonna kind of give y'all. Sorry. Shoot. I'm gonna give y'all basically a basic rundown about how I took these trades. Sorry, I'm like yawning and everything. Hey, the price you pay. Yeah, if y'all have any friends that want to join, just go ahead and send them the invite link and everything. Now, to be clear, this is not a signal room. And I'm not a mentor, so I'm not gonna sit here and mentor people. But and this is kind of like the main reason I created this, because a lot of people want me to teach them, and if I'm being honest with you, bro, I don't have time for that. I really don't. And it's not that I don't want to have time for it. Like I'm just so busy I don't have time to actually just mentor people all the time. Especially multiple people. Mainly because, I have a lot of ministry stuff I have to I can't talk today. I have a lot of ministry stuff I have to do. And then on top of trading, and then trying to, balance my work life as well, because I am an IT specialist at the hospital. I'm trying to balance that and ministry, and then come home and try to have relaxing time and stuff with my wife. So we're just trying to manage our time very well. So that's kind of why I created this, is because a lot of people are interested, but they don't know where to start, and they don't even know how to analyze the market, et cetera, et cetera. So that's kind of what this is for, and to keep a record of my trades for when I back test and see what I did right and what I did wrong, et cetera, et cetera. That's kind of why I do this. So yeah, join this. If you haven't, send this to your friends if they're interested in trading at all, just to kind of follow a trader. I'm not a financial advisor. Just disclaimer. You take all these trades at your own risk if you do take them. I usually don't send out trades as if they are signals. So most of the time, y'all probably aren't going to take these trades. Or if I do send them out, you're probably going to be too late. And I do that for a reason, because I don't necessarily want everybody just taking the trades I take. I want to teach you how to fish and not just give you the fish all the time. So yeah. Anyways, let's just go ahead and get into the trades I took this week and why I took them. So let's start on gold. And I'm just gonna kind of go in order. Gold. This was where I took this trade right here. Now, this is an ugly area. I'm not even gonna lie, but I kind of saw through the noise. Maybe the 15-minute will be better. Yeah, 15 minutes better. So first of all, let's go back to the 1 hour and let me show you. What do you see? The market's just going up. This is what gold does. When it trends, it trends. Like, I can go out to the daily chart and you can see that. Look, it just trends, okay? So when it's going in one direction, just go with the flow. Don't try to sell the top. Don't try to buy the bottom. Just go with the flow. Okay, so first of all, I was like, nah, bro, there's no way that there's not a trade in here. So I'm on the 1 hour, right? And this looks kind of ugly, but I go down to the 15-minute and it becomes so much more clear. So first things first, and honestly, my favorite tool in trading is the Fibonacci extension. Many people dog on it. Many people call it retail trading. But if I'm being honest with you, bro, supply and demand and smart money concepts is literally just retail concepts refined. What do I mean by that? I kind of sent it out in the chat. So let me go back up. So smart money concepts love Wyckoff. Like, this is like a schematic for how the market usually delivers and distributes itself. Now this looks very confusing, and that's because it kind of is. If you're in the market real time, you are not going to be able to see this. If I'm being honest with you, you're really not. Some people can, and hey, good on you if you can, bro. But I'm not looking to do the break, the automatic rally, the ST, the sign of weakness, phase B, the UT, the UTAD test, and LPS and LPSY and sign of, I'm not doing all that, bro. This is literally like, watch this. Head and shoulders. Wow. Just look at that. And then watch. Come on. Okay. Head and shoulders. That's what that is. And I showed y'all that right here. Head and shoulders. Which this looks like an upside down version of this. It's not exactly. Now, Wyckoff schematics can look different. And there's like 4 different ones, which is another reason why I hate using Wyckoff. Because it's so, yeah. Anyways, y'all didn't come here for that. But I gave y'all some examples like head and shoulders, head and shoulders, head and shoulders. A lot of people would see this as Wyckoff, which it is. Really, in all reality, that's basically what it is. Anyways, I love Fibonacci. That was my point. And Fibonacci lines up almost perfectly every single time with supply and demand zones. Why do I say that? This right here is a demand zone. My favorite Fibonacci extension point to take entries at is the 78.6. Now, tell me what you see. They line up almost perfectly. Now, I do use both. I'm not saying I just use Fibonacci. No, I definitely use supply and demand because it gives me better entries. But in the grand scheme of things, retail concepts are not that far off from not Wyckoff, but smart money concepts. Okay, so let me just get that out of the way. So, yeah, I just wanted to say that before people start dogging on me for using the Fibonacci. Like, oh, it doesn't work. Yeah, it does. You just gotta learn how to use it. Okay. Anyways, that was my soapbox. So what did I see? I saw that price came up, retested into the supply zone. So that means this is mitigated and this is clear. I'm not using this price structure as any kind of entry points or extension points. I'm using this one now. So price came down here, broke structure, as you can see. We'll just put it right here. Price broke structure impulsively. So I was looking for price to come back down to the 78.6 and get me into this trade. Now, why did I choose this specifically? If I'm being honest with you, bro, that's it. 78.6. And this trade happened in my sleep. Like this one candle, as you can see, happened at 4 a.m. New York session open. Yeah. That's it. That's literally how I took the trade. That's it. Like there's nothing really more to it besides this right here. I did draw out this demand zone, but as you can see, it really didn't touch it. It may have tapped. Well, yeah, it did. Okay, so right here, I drew this out, but I didn't put an order in there just because. But if I was awake, I most definitely would have bought when it came down here. Why? Because of these equal lows right here. This is liquidity in the market. Most people would have seen this and been like, wow, okay, support is holding. Let me buy it this bullish engulfing candle. And yeah, write it up. And you would, now on the bright side, you probably would have got some profit, like 3%. Okay, cool. But then when it came right back down and stopped you out. Okay, so yeah, anyways. But yeah, that's liquidity. Price literally just dipped, did a stop hunt in the New York session open and shot up. And that was how I took this trade. And my take profit levels was a 0% and a negative 27%. And that's how I took gold. That's it. Okay, moving on to the next. I'm going to save US30 for last. Okay. I took 2 trades on the Japanese index. And why am I trading this index? Because it moves in the middle of the day for me. Like it moves at 2, 3, 4 p.m. And that's a time that I like to be on the charts. But nothing else moves except for JPY pairs. Specifically JPY, the JPY index. Now, not every JPY pair moves at that time because there's obviously other currencies involved. But that's why I started trading this index. So what did I see here? Let me just ask you, what do you see here? I'm going to give you a second and just tell me what, don't tell me, but tell yourself, say it out loud. What do you see? It's on an uptrend. That's what you see. You should see that. But however, you're like, oh, it was on an uptrend, but you took a sell. Yeah, I did. And I'll show you why. So that was this right here. I took sells. And I gave y'all the chart analysis and everything. And I'll show you why. So, first things first, look at this. Like, just look at how impulsively price moved up. Okay. So, take that into consideration and then think to yourself, price absolutely has to come back down into this area at some point in time because they left missing price all right here. This whole area, price needs to come down and mitigate. Okay. So, basically, what I did was when price came up here. Let me draw out my Fibonacci. All right, there we go. Yeah. Okay. So I drew out my Fibonacci, right? I didn't do it right here because this was this ugly price movement and I didn't like it. But then price shot up again. And then I'm like, okay, yeah, we're going to have some retracement because not only did it leave missing price right here, but it left missing price right here too. So it has to come back down to both of these areas at some point in the future. So, but keep in mind, it's on an overall uptrend. But I understand that price has to come back to retrace at some point. And this index loves to retrace to the 78.6, which is my favorite entry point for the Fibonacci. So here we go. I go down to the 15-minute. That's what I saw this on. So here's what I saw. Like, this was just a beautiful downtrend. Support. I mean, this was resistance right here. Sellers just love this area. 1 sell, 2 sell, 3 sell, 4 sell, 5. Like, it just keeps touching this area and it just sells. But also, here's another thing that you can think about whenever it comes to this area. Watch this. Fibonacci. What did it come and mitigate? 78.6. Which lines up with this supply zone. See what I mean? If you use both, bro, you'll have such great entries. And then it did it again. Did it again right here. Boom. Now there's no supply or demand in this area specifically, at least not on this time frame. I guarantee you if you drop down to the 5-minute though, you will have one. Yeah, still no. I mean, the 1 minute is, I don't use the 1 minute for supply and demand, but just for the sake of back testing, let's look at it and see. Yeah, no. Okay. So let's just, yeah, let's leave that alone. Anyways, but it still came back to 78.6 and dropped down. Now, I mean, it did come back up and tap, but you know, it is what it is. So my analysis was literally Fibonacci and the supply area, which was right here. All I did was take the 50% of the Fibonacci right there. I put my order right here. Stop loss at the 0%. Take profit at the negative 27. That's all I did. It was that simple. I literally do not need to explain this any further. It was that simple. It seriously was. My supply and demand, which this was supply, mixed in with the 78.6 Fibonacci that it came to mitigate. And as you can see, when I took my entry, I took it at the 50% fib. I mean, at the 50% mitigation of the supply zone. And I took one at the 78.6. And then I just took another one, a random one down here because I saw how price was moving impulsively. So I just stacked my orders right there. That's it. I don't need to explain this one further. Okay, next. On the same pair, remember, I said this is an overall uptrend. So price has to come down in here. Now, I already mitigated this missing price area. So now it has to come down and mitigate this one, which it starts doing right here. So right here, I'm like, okay, I drew my Fibonacci extension. This was the area that I was looking to get price in at. Now, this is what ticks me off about the market. See that? See that? See? Look. It missed my entry by like not even, let's see, like 6 points. That like, bro, it missed my entry I mean, I still got in, but like that's what makes me mad. It didn't even tap the 78.6. It didn't tap this demand area. It just came real close to it and yink, took off. But I still took an entry in here. I forgot where it was. This was not my entry. I did not get an 18 to 52. I'm pretty sure my entry was this right here. That was my actual entry. Now, as you can see, if I wanted to do marketing and get, money out of people and be like, hey, buy my $1,000 course and you can catch trades like this, 18 to 1 risk to reward ratio. Like, I could do that. I could be that guy that just sells people off of a dream that they can get in on massive trades with no drawdown. Yeah, no, this was the trade I took. Quite literally. Still a pretty good trade, not even gonna lie. But I was still expecting price to come down here and at least tap into this area, and it never did. Instead, it never came back. It just took off like a rocket. But that was literally how I analyzed this trade. It was on an uptrend. It came down to the 78.6 Fibonacci extension, or at least almost to it. It showed bullish momentum, so I took a trade, and boom, that was it. All right, on to the next. Now, USDJPY. This one was pretty easy. Let me go out to the 4-hour. Tell me what you see. I'll wait. It's on an uptrend, yes, but you have to think this is the 4-hour chart, so take it with a grain of salt. This is resistance. Look at how many times it taps and sells. 1, sell. 2, sell. 3, sell. 4, sell. So if it comes back to this area, what do you think is going to happen? It's probably going to sell, most likely. Not only that, but I hope that y'all can see this, bro. I literally sent this out in the chat. I hope y'all can see this. Head and shoulders. Yeah. Head and shoulders is a reversal pattern for those of you that don't know what it is. But it's easy to see, as you can see right here. And honestly, if I'm being honest, this is so pretty. Look, so there's a head and shoulders right here, right? And then there's a head and shoulders. Here it is right here. Head and shoulders. Right here. That and then look how it lines up. Like, this is such a great range. Like, many people will say, this is a consolidation, so stay out the market. Bro, literally, if you just sold when it got to support and bought when it got to resistance, like, you could have caught literally all 3 of these trades. 6, technically. So, anyways, but I saw that. This was just funny to me because I saw this and I'm like, there's no way that that price cannot come back to this area and not sell. But there was some complications when it came to this trade because the first thing I look for whenever I step on a chart is trend, and then I look for supply and demand. Now, when I got on the chart, I was looking for this to be mitigated right here. This is what I was looking for initially, and I'm pretty sure I sent that out in the chat. Let's see. Right. Nope. That's not it. Right here. Okay. Yeah. Right there. That's where I was looking for price to eventually turn around at. And I knew that it may not hold just because we had this higher 4-hour zone up here. And but I took my chances anyway because that's just how I am. And obviously I took a loss on that. As you can see, it came up into that area. And I got, well, wait, this was the 4-hour. My bad. This was the one that I was looking for. And as you can see, when I took my entry somewhere in here, I'm pretty sure it was like right here. I got stopped out almost immediately. It's okay. It happens. It will happen. Okay. I'm not perfect either. But I got stopped out, but I realized this was a 1-hour supply zone. And this was a 4-hour supply zone. Now, the one that's most likely to happen is going to be the 4-hour, just because. And this whole entire area is where sellers love to step in and send price to the downside. So with that knowledge, I was like, okay, well, let me wait till it gets up here and then I'll sell it again. So I deleted that. I deleted my analysis right there. And I just waited for price to come up here. Now I dropped down to the 1-hour. There was nothing else in here that I could refine this to. So I just left it as is. Now, because banks are banks and they love to screw retail traders over, this is what they do. And this is the reason why I put my stop loss a little bit above and below zones whenever I take my trades, is because of this stuff right here. Banks love to do this, bro. They love doing this. Like, you can be right about the direction, but wrong about the trade. And banks love to frustrate people like that. But I mean, me having experience in this field, I know that banks love to do this. So that's why I took my entry right here, which was the 50% mitigation of this supply zone. Like I mentioned, in gold, 50% mitigation, or US30. Well, I haven't even got there yet. Oh, okay, I'll show you that later. But anyways, basically, yeah. And this trade played out a little bit. Obviously, next week I'm looking for this trade to continue to the downside, but we'll see how that plays out. But that's how easy this trade was. It wasn't even hard. Like this was, I usually don't use support and resistance, but if you see support and resistance, come on, you can't deny the fact that every time price gets to this area, sellers step in and send the price to the downside. That just tells me it's going to do it again. So that's all that was, quite literally. All right, now moving on to the best trade that I took, which was US30. I loved this trade because it was so textbook. Now, first thing I looked for was a trend. What kind of trend do we see? Uptrend. Cool. All right. So, first things first, Fibonacci, because we know I love me some Fibonacci. Okay. So, what was I looking for? Price to come back down to the 78.6. Now, why did I choose this point? Because look at this impulsive green candle right here. That's how I knew this was the point that I should set my Fibonacci at. And Fibonacci can be subjective. That's okay. It is what it is. But that's the place that I wanted to put it. I also went out to the 4 hour and it looked exactly the same. This big candle right here, even though it did come and get mitigated by this pullback right here with the 61.8, I still looked at this as okay, I think price will come down into this area again at some point in the future. So that's exactly what I waited for. I drew out my Fibonacci, drew out my take profit levels, and boom, there we go. All right, so price came up, yada yada yada. I took no trades in here until it came down to my areas. Now I think I didn't send it in the chat. I may have taken this right here, which obviously would have got me stopped out at break even. So I wouldn't have lost this trade because by the time it came up to here, I would have put my stop loss at break even so that I don't lose. And then it came down and it stopped me out. So I saw that and I was like, all right, cool. So it's got to come down to this demand area. This is the last area that I'm going to look to take buys. If it breaks this area, then that means that US30 is on a sell. It's on a downtrend now. So basically I drew this out and I was like, all right, cool. I'm gonna wait for it to come down into it. And it sure did. And on the 15-minute, it looked so pretty because it came down, it consolidated and came down into this area and then came over here. And I think this was the point that I had. Yeah, this is the head and shoulders right here. And I sent that out in the chat. Yeah, so I sent my initial entry out right here. And then, oh, whoops. Yeah, and then I sent out the head and shoulders right here. This was the 5-minute chart. So I saw the head and shoulders and I was like, yep, taking the trade, as you can see right here. I mean, even y'all could have gotten on this trade and it would have been beautiful. But anyways, yeah, that's literally all I did. I drew out my demand zone and I love my 50% mitigations because it gives me sniper entries. So 50% mitigation right there. It didn't tap it, but I just bought at the top of the zone. I didn't care about no 50% mitigation at that point. But what gave me extra confluence to stack entries on this trade, because I think I showed y'all, yeah, I stacked 2 entries right here, and then I stacked more and more. So I just kept stacking entries. I was using two separate accounts, by the way, but I was like stacking mad entries because of that reason. In this demand zone formed. So if you get 2 in a row, if you get a demand zone inside of a demand zone, you can take that trade with confidence. So what I did was I put my, box up here, and this 50% line was the 50% mitigation of this demand zone. So I deleted that. I took my entries at that line, put my stop loss below this demand zone, which was right here. And I rode the trade up. And as you can see, it's on its way. It's on its way to take profit 1 and take profit 2. We'll see how price delivers next week, but that's how I took this trade on US30. All right, yeah, that's it. If y'all have any questions, let me know. Send this to your friends. Send the chat to your friends if they want to learn how trading goes and how it is to follow someone that actually trades. Yeah, thanks for watching, and I may do these weekly, may not. It just depends on how I feel. And that's the main reason I don't want to mentor people, is because I don't want to feel obligated to do nothing, bro. I just want to do it whenever I have time, whenever I feel like it, and yada yada yada. Anyways, God bless. Y'all be good. And yeah, let's get this bread.